Alright guys, in this video I'll be covering hourly ranges and how I trade them and why they might be important to you, especially if you're an intraday trader and you're not really trying to catch the bigger moves, just a portion of the daily range. This is a concept that I like to use fairly often to frame a trade setup. And basically, I'm sorry I haven't been posting as much this video. I've just been very busy. I've been trying to post this for the past week or two, just haven't had any time to put some quality into it. And that's what I always try to preach on this channel, is trying to give you guys the highest quality as I can. So let's just jump into it real quick. So first we'll be talking about what is a range. A range is when prices accumulating orders on both sides of the market to build interest and smart money sponsorship based on our time and our drawn liquidity. 70% of the time, the market is spent in accumulation, according to ICT, and from what I've heard from Romeo. So this is just an example of a range. You know, there's not really much movement. It's kind of just SMT at highs, lows, and kind of just stuck in a tight area of consolidation. And why are ranges important? Ranges are important as almost all the time price will expand in one direction energetically, especially if we have a strong magnet on price, or if we're in an area like a -1 to 1.5 where we're just going to accumulate. And ranges are very important in the market maker buy model and predicting future sell or buy models, because the market will generally reference ranges as a strong draw on liquidity, and also will use it to complete and start buy models or sell models. So we'll talk about divisions of time, because this is also very important to hourly ranges. So in your daily candle, you have 1, 2, 3, 4, 5, 6 4-hour candles, and those 4-hour candles are then separated by 4 1-hour candles in each. And then that is, within those candles, you have your 1 minute, 5 minute, 15, and 30-minute divisions of time. And this image is by FX for Living on Twitter, if you guys want to check him out. This is just where I got this image from, so I'm going to credit him. And yeah. Let's hop into some chart examples and maybe some potential models that you can use to trade hourly ranges. Right here, we have our, let's zoom in here. We have our, pretty much our 4-hour chart on NASDAQ. And what I'm looking for is, a range that is already been established to potentially find, shorts in our bias on. So an example of an hourly range is if we split up the 2 a.m., 6 a.m., and 10 a.m. candles. We can then drop down further, and we can see that we have 1, 2, 3, 4 candles within this hourly time frame. Again, we have 1, 2, 3, 4 within this another 4-hour time frame. So how I like to break down the hourly ranges is I like to split my 4-hour time frames into 4 different parts. So starting here, we have a 6 a.m. hourly candle, 7 a.m., 8 a.m., and 9 a.m. What you will find mostly within the 6 o'clock to 10 o'clock candle is that the 9 a.m. candle usually creates the high of day or low of day. In this case, what is our strong draw on liquidity going into this week? We have a premium imbalance that is resting at about 50% of the previous day from Friday's trading day. So if we take our OTE fib, we can see that this is above in a 50%, right? So we've already understand our draw on liquidity, and we have already made the premise that we are right above the midnight open and above the weekly open, which was unmitigated and had no SMT near it. So this can be a strong draw on liquidity. So how I usually mark out my hourly ranges is I then go on to the one, I then choose which, if the opens at 6 o'clock, then I'm expecting in the 3rd or 4th candle to where we see our manipulation, right? So our 3rd candle does manipulate, but then 9 o'clock takes its high. So we'll kind of just dive deeper and go on the 5 minute to break this down even further. So as you can see, 8 a.m. right here, we have 8:30. It's our news candle. So this is going to be what's propelling price higher. As you can see, it does not take this low, so we're in bullish order flow as we're going down here. And you can also see we have an accumulation zone right here and also unmitigated London and Asia lows sitting right here. So when 9 o'clock hits, what we can expect is a sweep of the previous hourly candle. And then it talks about with Romeo's 3 candle model, if you go back, you have 1, 2, 3, right? So this is going to be our hourly range. And how I like to gauge this and how I like to trade within this hourly candle is I like to mark out the quadrants of the candle that I'm trying to trade, or the range that I'm trying to trade. So once we have this, I'm looking for a low time frame range to be swept, and then price reverse at around the 9 o'clock hourly candle. So our 8 a.m. candle, 9 a.m. candle, what it does, sweeps the previous high. And then also what we can use as higher confluence, what I talked about with SMT, is we can see here with ES that it does not actually trade to this high, to this premium imbalance. We actually don't trade into it, but NASDAQ trades into it. So that's just extra confluence. So what I like to see is I like to see 9 o'clock open, have some kind of open low, create a range at first. And I'd like to see that these two highs are going to get taken at around 9:15, which is our first division of time within the hourly chart. We have 6 15-minute candles. I believe, wait, hold on. Yeah. If you go here within our hour, four 15-minute candles. So 1, 2, 3, 4 inside of this 15-minute inside of this hourly candle. So we'll expect the first candle, the first 15 minutes to kind of generate interest on both sides. And then we'll see that the second candle, which is usually our manipulation, so this works in fractal with the daily and weekly profiles. So as you can see, we have our first 15 minutes, create this range, then the second 15 minutes sweep the range, and then we can use this thick volume candle to target equilibrium and the low of this previous hourly candle. So as you can see right here again, 8 a.m., 9 a.m. sweeps this high, and then we can target either 50% of the dealing range, which would be considered this overnight session. So we can target right here, 50% level, and then we can also target the low of the Sunday open. So that's just one example for a sell side example. And then as you can see here, we have this as well. So if we go down here, whoa, I did not mean to do that. Let's move this back. Oopsies. What just happened to my chart? Okay. Random. All right, I'm gonna fix this and then I'll catch you guys back. 1 second. All right, we fixed the chart, but I'm gonna go back into another example. So this was from Wednesday, March 20th, and this is just a buy example. So as you can see here, if we go on our hourly, where are we again? Okay, so if you go on our hourly, you can see right here, this is our 12 o'clock candle, 1 o'clock candle, and then our 2 o'clock candle. Now, the important thing to note is that when we have high impact news, there's likely going to be a manipulation in the opposite direction before news goes higher. So in this case, what we can see is that we have a accumulation range. So right here, so we'll mark out just the 10 o'clock 4 hours right here. So 10 o'clock to about 2 p.m. right here. So this is going to be our 4-hour candle. And what we're expecting is we have a 10 o'clock accumulation. So 1, 2, 3, and then the third candle, so the 1 o'clock candle after 10 o'clock, sweeps the 10 o'clock. So this is our hourly range from right here. We'll mark it out. So this is our range currently. And then what we'll be expecting is a 3-candle model to form again. So we have 1, 2, 3 accumulation, and then 1 o'clock right before we have our news. It manipulates lower. We have SMT as ES takes out this low right down here, and NQ does not. So we have SMT with our London lows. So that tells us that if there's SMT at these lows, then price is likely going to go higher. So we'll drop down into the 15-minute. So when we drop down onto the 15-minute, you can see we have a low time frame range between 10 o'clock to 1 o'clock. So we can establish this as a 3-hour candle, essentially. So 10 o'clock, and then we have 12, and then we have 11. So right before FOMC, you can see that we have this accumulation range. So as soon as 1 o'clock hits, we can understand that when this candle opens at 1 o'clock, and you can notice how it refers back to it at 2:30. So we have our 10 o'clock hourly candle, 11 o'clock hourly candle, not really doing much. and then we have our 12 o'clock hourly candle. So we'll start at 12 because this starts the 6-hour cycle from 12 to 6. So this will be our accumulation. Then hour 2, it sweeps that low. And then hour 3 is a continuation at least to 50% of this range right here. So we can target 50% of this range. And then we can target the high of this range. And you can see that right here is this range is generating interest on both sides of the market to try to trap traders and create a false narrative for them. But what they don't understand is that this model is dependent on time. So when you see that we have accumulation and then you see this PM hourly candle, so from 1 to 2 o'clock because our afternoon open is at 1:30, you can see right here 1:30, then we sweep it and then price continues higher, right? And this is just an example of your hourly model in terms of on the buy side of the curve, or on the sell side, and then leading up into buy side to target liquidity that was formed in the previous hourly candle. So this high right here, so this will be our range. As you can see, these candles are trading inside this range, not really breaking this high or low until 1 o'clock hits. We sweep the low, and then you can place your entry right below this low or below this low as they both get taken, and then you can expect price to move higher. So that's just 2 examples on this hourly range, hourly model. And as you can see, it also pretty much works here. So as you can see, we will start right here. So this is our 10 o'clock to 2. Let's mark this out right here. So this is our 10 o'clock hourly candle. So we have 1, 2, third candle does not take this high. But what we can see is that there's SMT. So in this 3 candle model, you can see we have a range. So this high to this low. Price then sweeps the low, does not create SMT. And then right here, no SMT, meaning no reversal, right? So then now, when we see this SMT forming at a key level above the monthly open and inside of this accumulation range, which is another point of reference to the market maker sell model. So when we hit about 50% of this range, then you can see us reject perfectly, right? Notice how the wicks are just only going above 50% of this range up here. So when we have this SMT, we have a 10 o'clock candle, and then our range is from this high to this low. We then sweep range high. So this is our previous 4-hour candle. So right here from 6 a.m. to then 10 a.m. right here. So this marks our 10 a.m. candle. We sweep the high from 6 a.m. So we sweep the previous 4-hour high, and then we target 50% from this high to this low. And we can also target the low as a nice target, right? So this can be fractalized on pretty much any time frame. I'm showing it to you the hourly because it helps fractalize the 4-hour candles and helps look for when the right turtle soups are going to happen, right? So we see open, low, high, turtle soup, SMT, and then close, right? So our 10 o'clock candle closes at this low, and what are we targeting? We're targeting this liquidity because now we've hit a high time frame key level, such as the monthly open and a 1-hour order block. We've created SMT, and it's also during the 4-hour candle from 10 a.m. to 2 p.m. So this is another great example of when to use hourly ranges, and understanding that this right here is a range. Every candle is a range. So when we sweep this range, create SMT, and then we go lower. So that's a good example of this model. So I'll be showing some rules on how I trade this model and how you guys can possibly backtest this to find results for yourself as well. So with this framework in mind, this is just a example of a framework you can use. Obviously, there is more internal dynamics that are a part of this model, but this is just a beginner look at how to visualize this model essentially. And I'll be going through checklists and showing you guys how you can use this model pretty much every single day. So during each 4-hour candle cycle, mark out the high and the low of the previous 4-hour candle. Example 6 to 10 and 10 to 2. So 6 a.m. to 10 a.m. and then 10 a.m. to 2 p.m. Next, drop down to the 1 hour and identify an hourly range occurring from the first or second hourly candle within the 4-hour candle. So let's say 10 o'clock opens, then we see 11 o'clock and 11 o'clock, or let's say we see the 10 o'clock hourly candle and the 11 o'clock accumulating or in a range. It doesn't have to always be just a perfect square accumulation. It can be a triangle. There's many forms to accumulation. Then what you'll do is you'll wait for the possibly 11 a.m. or 12 p.m. candle to sweep the previous 4-hour candle or previous hourly candle and identify the opposite direction. So if bearish, wait for a key level to be taken, such as a PDRA and a premium and discount, a time-based open, or a old high, vice versa for bullish. And then 4, identify if we have any SMT correlated between the 3 indexes. Yes, YM as well. So let's say you see the 10 a.m. create a range, right? Then you see the 11 a.m. sweep the 10 a.m. high, and you can see ES doesn't take it. Then you can look to find shorts off of that as well. So then finally, you'll look to target 50% of the previous 4-hour candle as a first target and the low of the previous 4-hour candle as a second target. This can also be applied to previous hourly candles as well. So let's say 10 a.m. creates a range again, or 8 a.m. creates a range again, and 9 a.m. sweeps the high. Then you can look to target 50% of the 8 o'clock candle and the low of the 8 o'clock candle. So let's say, we have SMT between 8 a.m. and 9 a.m. and then you can look for that vice versa, and it'll be a pretty helpful way to find targets as well. And you can use the open to high for standard deviations if you truly wish so as well. But we'll kind of go over the framework. So let's see. So as we can see right here, this also applies here. So we have our, so let's see. So our 6 a.m. to our 10 a.m. candle. And as you can see, so from our 6 a.m. we have our 2 a.m. range. So this is our 4-hour candle. So as you can see right here, 6 a.m. opens, 7 a.m. creates another range. So first 2 candles of the range. Price then sweeps this low, sweeps these 2 candles. So this is our low time frame range, sweeps this, and then we can target right here 50%. So we can target the 50% level and these highs that are resting above it. And we can also target this previous 4-hour candle's high as well. And higher confluence if we see some sort of SMT here as well. So as you can see, this low gets taken by ES right here, 8 a.m. candle. And as you can see, NQ creates SMT here. So this is what I like to look for. I like to look for high time frame hourly SMT to pair as well for strength with one index according to another. So then that's kind of how you can gauge this as well. This works at 8 a.m. So you can see 8 a.m., 9 a.m. sweeps the previous 8 a.m. candle. And then you can use this 10 a.m. candle and you will find that we tap perfectly into the 0.5. So even if you are trading against order flow, you can see that sometimes it'll work where we'll retrace back into the previous 8 a.m. candle to then send price higher, right? So those are just some examples of the model. This fractalizes, so if you're thinking of daily, then you can look down and you can look for the sessions. So you can look for Asia session, London session, New York session, or you can split it, like I said, into your distributions of time. So look for your 6 4-hour candles and split it that way. And this also works on the weekly. So if you have 4 weeks in a month, then you can look for week 1 and week 2 to create a range, week 2 to sweep that range, and then week 3 to target the opposing side of the range. So the highs that are created within that range. But overall, that's it. Hope you guys enjoyed. This was a bit of a longer video because this is kind of an advanced topic. But if you guys have any questions, please feel free to message me on Twitter or leave a comment and I will get back to you guys. So yeah, thank you again.